Now we understand the liability side of the balance sheet line by line. So the first item, as we discussed, is shareholders fund. Shareholders fund, it is also known as equity. It is also known as net worth. It is also known as book value. So this is how you will understand the shareholders fund. Shareholders fund would comprise of two kinds of capital, equity share capital and the preference share capital. Now please remember, any company anywhere in the world will have to have equity share capital. But some companies all over the world can also have preference share capital. Preference share capital. In India, there are about 40 lakh companies, and in my view, would be few thousand companies, they will have preference share capital also. All companies will not have preference share capital, but all companies will have definitely equity share capital. What is the difference between these two? The first difference is ownership of the company is with the equity shareholders and not with the preference shareholders. That is difference number one. Difference number two, payment of dividend in case of preference share capital is at a fixed rate. In this case, it is 7%. In case of dividend, there is no fixed rate of dividend. It is possible that company may not pay dividend at all to the equity shareholders, and it is also possible a company, if the company has got very high profit, it can also pay dividend at a rate of 5,000%. And I remember few years back, Hero Honda, when they were joint venture, still a joint venture. Today Hero is separate, Honda is separate. When they were joint venture, this company had declared a dividend at the rate of 5,000%. So that is another difference between the equity share capital and the preference share capital. The third difference is, in case if company decides to pay dividend, they will have to first pay dividend to the preference shareholders. Only after dividend is paid to the preference shareholders, then the company can pay dividend to the equity shareholders. And fourth and final difference is, अगर ये company कल बंद होती है, if this company tomorrow closes for whatever reason, first money will be paid to the preference shareholders. Only after anything is left, money will be paid to the equity shareholders. So that is your preference share capital and equity share capital. Let's look at item number 3, share premium. Now what is share premium? Let's understand.